This is Eric Brotman, the host of Don't Retire, Graduate, the podcast that asks you what you want to be when you grow up so you can graduate into retirement with purpose and with passion. Welcome to our Diary of a Financial Advisor segment, where we interview financial advisors about their professional journeys and their passion for helping others succeed. Today, I'm pleased to be joined again by Jillian Howell. Jillian is a second-time guest here. She joined BFG Financial Advisors in March of 2025 and can't get enough of the podcast studio. She has brought a fresh perspective and a strong foundation in communications to her role as a client service associate, graduated from University of Maryland College Park, earned a BA in communication studies with a minor in general business all the way back in 2020. And since entering financial services, she's committed to helping clients feel supported and informed on their journey to financial well-being. She's also taken a real gleam to the insurance world and is going to be participating. So we're going to talk a little bit about that today. Jillian, thanks for coming back.
Thank you for having me again.
You know, most people, when they guest on this show, are like, holy cow, I'm so glad that's over. This was a nightmare. And yet you're like, I can't wait to do that again. So I guess let's begin with the way you felt when you saw your very first interview, because that went live shortly ago and it was a big deal.
I was pleasantly surprised. I didn't expect myself to sound so put together and eloquent. So pleasantly surprised. I know my family really enjoyed watching it. So looking forward to sending this one out to them again, too.
All right. Well, a shout out to family is coming. So why insurance? Because a lot of people want to talk at cocktail parties about their portfolio and they want to brag about this, that, or the other. And nobody's like, hey, you should see my insurance policy. It just doesn't happen. So why has that become an area of interest for you professionally?
Well, it started when I obtained my life and health insurance license. That was kind of the first stepping point of, building my repertoire of certifications and just being more knowledgeable for clients and products for the team, everything like that. So it really just kind of fell into my lap. But the more that I learned, the more interested I am about it. I think there's a lot of ins and outs that a lot of people don't really take into consideration. So just being able to be a resource for folks, I think, is super important.
So we refer to, at DRG and at BFG, in fact, we refer to this as part of the risk management plan. So risk management includes insurance, but is not limited to insurance. There's also legal documents and contracts and titling and tax stuff. And so risk management is a broader topic than just insurance, but there are some must-haves in the insurance world that pretty much anybody watching today should at least have some boxes checked and maybe do some regular reviews. Since you are now a licensed professional, why don't you tell us a little bit about what those are and sort of where to get started?
I think a couple of the most important points would definitely have to be debt replacement. If you have any kind of debt, and, leaving that for your family can be a big struggle. So being able to replace that debt with a policy would be beneficial. Income replacement, if you're the top earner of the family, being able to keep them sustained if anything, God forbid, were to happen to you, is super important as well. And then, of course, just kind of future planning, that estate planning aspect of it, I think is a big point of consideration when you're picking a policy and picking your coverage. So
you're specifically talking about life insurance in this particular debate, or not debate, but conversation. And there are lots of different kinds of insurances that are part of the risk management conversation. Life insurance is certainly one of them. And I love that that's an area where you've elected to concentrate, because I think there are so many misnomers and so much confusion around why it's called life insurance and not death insurance. We actually have a couple of clients who jokingly refer to it as death insurance, but that's not really what it's for. So how would you, if you were counseling someone, say this is the amount of life insurance you ought to consider? Because ultimately, having delivered dozens of claims over the many years that we've been doing this, no one's ever said, by the way, what kind of insurance was that? No one cares. It's how much are we getting? How soon are we getting it? And are we going to be okay? So how do you look at the math behind that?
I think, of course, it depends on people's situations. Like I said, if they have debt, if they have kids, there's a lot of different factors to take into consideration. But I think the most important thing to really think is anywhere from maybe 10 to 15 times your income, trying to set yourself up for success in that point so that you are able to, have resources for your family if you're no longer there to support them yourself.
So there's a lot of different ways to calculate the need or desire, because sometimes life insurance isn't a need. Sometimes it's a want. There's reasons to use it for tax planning, reasons to use it for accumulation, reasons to use it beyond just what if I don't wake up tomorrow. One of them is referred to as capital needs analysis, where you actually will calculate the exact amount needed to replace either your human life value, which is your earning potential, or to replace the amount of a mortgage or other debts that are on. And you started to talk about that. But I think you have uncovered a myth about life insurance that maybe you didn't know in April of 2020 before you came, April of 2025 before you came to work with us. It feels like 5 years, John. So what is that myth, and how do you describe it?
I think a myth would be, I'm young, I'm healthy, I don't need the insurance now. I think being able to start sooner while you are healthy is super important. As you get older and your health declines, it can be harder to get coverage or to be able to get a price for your coverage that you're actually able to afford. So just having that mindset of, I don't need it now. I'm young and I'm healthy. I'm not worried about anything happening. Kind of combating that and starting sooner is super important.
So I'm going to try not to take offense at the fact that you said my health is waning in some ways, just because I've got a few years on you, decades on you. So yes, that is a myth. And it's interesting because we see a lot of parents and grandparents making sure that that their children or grandchildren have some form of insurability protection. My daughter had life insurance as soon as she had a Social Security number. That was just part of the deal. And not because any of us are hoping that we ever see that claim. That would be the worst thing possible in life, frankly. But because it will accumulate, it will create some tax shelter. It will also allow her, if she's less healthy in her 20s or 30s or 40s, it'll allow her to get more coverage without having to go through a medical exam. A lot of people don't think about that. Right. So that is a great way to preserve your insurability, your health level at the time you do it. So there are a couple things that we could use as a call to action. Like what do you think folks should do just based on the fact that they've just spent 10 minutes learning why you love this stuff? What should they do right now?
I think you really need to sit down and evaluate what you have as far as insurance, life insurance, auto insurance, health insurance. You really need to sit down and see what you have and then see if there's any weakness, any kind of area that needs to be built up a bit further. Some people, just have the group coverage through their employer, which is a great place to start, but it's certainly not enough.
So we would refer to that, I think, as taking inventory.
Right.
You can't figure out where you're going until you know where you are. It's the "you are here" sticker on the kiosk at the mall, so to speak. This is where, in order to get there, you've got to know where you are. I would totally agree with that. I think that's sound advice, just to take inventory and figure out where you are. And I think life insurance is something that's not to be bought and stuck in a drawer. It's something to be managed over time. We've done episodes of this podcast, of the full Don't Retire, Graduate podcast, about how life insurance is an asset to manage, not something to buy and stick in a drawer. Where can folks find you if they want to learn more about your passion for this, or just in general? Where are you lurking online, or when you're at the office?
You can find me in the CSA office with the other client services associates, working away in there. I'm on LinkedIn, following along with BFG on there as well, and BRG. So, definitely check it out on there. And I'm certainly happy to help and always willing to learn. Well,
your advice was spot on. I love that you've done this twice, because that means everything happens in threes. So we'll have to schedule another visit to talk about maybe your golden retriever. Should we talk about that?
Yeah, that would be great. I know Bo would really appreciate it.
Is Bo insured?
Yeah.
Bo is insured. Oh, good. All right. And Bo can't be your beneficiary, though, in the state of Maryland. Make sure you know that. You cannot leave money directly to a pet. You can leave it to the care for a pet, but not directly. So you learn something new every day.
Good to know.
Jillian, thanks for doing this.
Thanks, Eric.
This was fun as always. I'd like to thank everyone for listening and watching today. If you enjoy our show, please subscribe so you never miss an episode, and you can continue to have Don't Retire Graduate as a part of your path to financial freedom. We'll be back next week with another engaging guest, and in 2 weeks with another entry in our Diary of a Financial Advisor, which will not, in fact, be Jillian in 2 weeks. We'll give her a break. For now, this is your host, Eric Brotman, reminding you, don't retire, graduate.
Securities offered through Kestra Investment Services, LLC. Kestra IS. Member FINRA SIPC. Investment advisory services offered through Kestra Advisory Services, LLC. Kestra AS. An affiliate of Kestra IS. Kestra IS or Kestra AS are not affiliated with Brotman Financial or any other entity discussed.